Let me ask you something. Are you investing or just gambling with the herd? Because right now the fear and greed index, Wall Street's emotion meter, is flashing extreme greed. We are at 75 out of 100. And history tells us one thing. Markets love optimism right before they punish it. But here's the kicker. No one on CNBC or Bloomberg will tell you to slow down when the party is hot. That's where the fear and greed index steps in. It's the unfiltered reality check. So, what is it? And why should you care?
Okay, let's go.
The fear and greed index isn't some astrology for traders. It's built on 7 real quantifiable signals. Stock momentum. S&P 500 above its 125-day average. That's FOMO on steroids. Price strength. Everyone's hitting 52-week highs. That's when weak hands start believing they are geniuses. Put-call ratios. People betting big on calls over puts, not realizing the rug pull often come next. Junk bond demand. They are buying trash debt with both hands. In what world is that rational? Volatility, the VIX index, down to 13. Low volatility, that's when the market kills you quietly. Safe haven demand. Treasury is ignored, stock adored. Classic setup for blind side. Breadth and volume. It's all green until it's not. These are real-time reads on crowd behavior. And right now, the crowd is drooling with greed. The controversy no one talks about. Here's the party they don't teach at Harvard or show you in glossy investment ads. When this index hits 75 plus, hedge funds start exiting quietly while retail investors are buying the hype. It's not just a sentiment index. It's a wealth transfer signal from emotional traders to cold-blooded pros. Let's talk facts. In November 2021, the index was at 80 plus. What followed? A 25% correction in the S&P. In February 2018, same story, greed maxed out, and then came the infamous Volmac crash. Even March 2020, at extreme fear index at 12, was the best buying opportunity of the decade. So ask yourself, why do we chase the high when the data tell us to do the opposite? Because most investors don't want truth. They want comfort. And comfort in market is often the most dangerous place to be. What's fueling the index in 2025? Right now, in mid-2025, rate cuts are coming, but slower than expected. The Fed is dancing, not delivering. Tech stocks are in a mania, AI stocks have gone parabolic, and people are using ChatGPT like it's the next Bloomberg terminal. Volatility is the record lows, but the world isn't calm. Debt is exploding, geopolitical risks are ignored. And the dollar's weakening, pushing emerging markets up. But how long can that really last? Yet the index shows we are back in euphoria. Why should you be concerned? Here's the controversial truth. Most retail investors use the fear and greed index completely backwards. They see extreme greed and instead of stepping back, they lean in. They think the market's confident, it must be safe. But remember this. Confidence without risk awareness is not strength, it's hubris. The smart money uses this index to fade the crowd. The dumb money uses it to join the crowd. So what should you do? If the index is creating extreme greed, here's what I advise. Take profits where gains look too easy. Hedge your portfolio with assets that thrive in chaos. Gold, defensive stocks, cash. Stop thinking you are missing out. Most bubbles pop when everyone feels invincible. And ask yourself this. If you were in a poker game and everyone at the table was acting euphoric, would you go all in or would you step away? The final thought: the fear and greed index doesn't predict crashes, but it whispers warnings. It shows you when the crowd has stopped thinking. And right now, the crowd is greedy, loud, and blind. So don't be the last to leave the party. Be the one who saw the lights flicker and slipped out before the stampede. Thank you.